Welcome to this deep dive. Today, we're pulling back the curtain on a figure whose immense fortune, we're talking $6.9 billion as of August 2025. Well, it often flies under the radar. Sir Michael Moritz. He's the man who quietly funded some of the most transformative companies of our time. Think Google, YouTube, Stripe, Instacart.
The big ones.
Exactly. But what's really fascinating and maybe surprising is that he didn't start as a Wall Street financier. His beginning was actually as a journalist.
Right, writing about Apple, wasn't it? Early days.
Yes, one of the earliest books on Apple and Steve Jobs. So that really sets the stage. The story isn't just about the numbers. It's about a truly unique mindset, a different kind of method that shaped this extraordinary, almost invisible career.
Precisely. And we're going to dive into that paradoxical journey, what we're calling a quiet force. Moritz's story, it's not just for investors, I think. It really redefines how all of us might think about risk, about power, and maybe even legacy. So our mission here is to try and decode his hidden playbook, pull out the core insights that reveal what we've started calling his invisible radar.
Invisible radar. I like that. What do you mean by that exactly?
Well, it's his remarkable ability to perceive these deep underlying shifts in markets, in human behavior, long before they show up on anyone else's screen.
So not just spotting a trend.
No, not fleeting trends. It's about understanding an inevitable trajectory, something structural.
Okay, let's unpack this. The money itself. When most people hear $6.9 billion, they immediately picture the static number, right? A fixed achievement, like a trophy sitting on a shelf.
Right.
But it sounds like for Michael Moritz, that number is almost, meaningless in itself. What does he really see money as?
Yeah, that's such a crucial distinction to make. For him, money isn't the trophy. It's not the end point. It's quite literally, as he's put it, the option to go against the crowd.
The option.
He sees it as a tool, as ammunition. Kind of like chips in a really high-stakes poker game. It's not about how big your stack is, but what that stack allows you to do.
Okay.
And you see that mindset so clearly in how he handles market volatility.
Yeah.
Take Stripe, for instance.
Right. That was a roller coaster.
Totally.
Yeah.
Its valuation went from, $95 billion in March 2021, then dropped sharply to $50 billion in March 2023.
Big drop.
Huge. Then it started rebounding, closer to maybe $65 billion by early 2024. Now, that kind of swing reflects massive shifts in market sentiment, fundraising rounds.
Sure.
But for Moritz, it was just an evolving option. He was judging companies by their survivability, not by, fleeting headlines or the immediate IPO pop.
Like with Instacart's offering.
Exactly. Yeah. Like Instacart's IPO at $30 a share back in September 2023. He's always looking past the immediate market noise. It's about the long game.
And to protect that long-term view, that optionality, he did something pretty unusual. He launched Sequoia Heritage quietly back in 2010. This wealth management platform, it grew to oversee, over $15 billion by the time he shifted his main focus there in 2023.
Yeah, substantial. So
what was the real purpose behind that? I read it was to preserve capital with the patience of a monastery. Great phrase.
It is a great phrase. And I think if we connect this to the bigger picture, the deeper psychology behind Sequoia Heritage, it wasn't just about protecting his own fortune.
Oh, interesting.
It was really about creating a kind of collective buffer for the whole ecosystem, for the founders, for the investors.
Oh.
It links back to his view of entrepreneurs, where money serves as oxygen for endurance, not a spotlight for, quick fame.
Right. Oxygen, not a spotlight.
Yeah. He's basically building the conditions for long-term health for audacious bets, creating a system that can weather downturns, avoid short-sighted panic decisions. It gives everyone involved permission to play that long game.
So when we look at how he treats money, what's the fundamental takeaway for us? It seems like a paradox, doesn't it? Building this massive fortune not by chasing the money itself, but by treating it as permission. Permission to wait, permission to resist, to say no when everyone else is yelling yes.
Absolutely. The core paradox is really striking. True wealth, the way Moritz exemplifies it, isn't just a fixed number in a bank account.
It's
about keeping your options open, embracing risk, but on your own terms, holding your nerve when the market is screaming bloody murder.
So it's a reservoir of options.
Exactly. Not a static pile of cash. It means having the freedom to act, or maybe more importantly, not act, regardless of all the external pressure.
Okay, let's shift gears a bit. His career path, it really defies the typical finance trajectory, doesn't it?
Oh, completely.
For someone who became such a titan of venture capital, where did Michael Moritz actually start?
And that's where his story truly diverges. He started, believe it or not on a trading floor, but as a young reporter at Time magazine back in the early 1980s.
Time magazine.
Yeah. He was tasked with covering the emerging tech scene, and that led him to publish The Little Kingdom in 1984. Like you said, one of the earliest really insightful books about Apple and Steve Jobs.
So at that point, he was literally simply documenting the story of others, just observing.
Observing the landscape he would eventually help reshape.
Exactly. So what changed? How does a journalist pivot into becoming a venture capitalist, and what kind of edge did that background actually give him?
Well, the pivotal moment, the turning point, came in 1986. That's when he joined Sequoia Capital.
Okay.
And his journalism background, it gave him this really unusual edge. Think about it. The ability to ask sharp, insightful questions.
Right. Digging deeper.
Piercing through those polished narratives founders often have. Spotting contradictions in their stories. He wasn't just looking at spreadsheets. He was looking for the human story underneath, the authentic drive.
And conviction.
Precisely. That let him see things, opportunities that others just missed.
And that insight, that unique lens, led to some absolutely legendary bets, starting with Google back in 1999.
Yeah, Google.
I mean, at the time, search was seen as, what, a commodity dominated by Yahoo Alta Vista?
Totally. It wasn't obvious at all. But Moritz saw something different, didn't he? He saw the obsessive drive of Larry Page and Sergey Brin.
That focus.
And what he called the mathematical purity of their approach.
Mathematical purity. What did he mean by that?
I think he meant the elegance of the algorithm-driven system. It prioritized relevance and scale over those messy, human-curated directories that were common then.
Oh, okay.
It was just a fundamentally different, much more scalable way to organize the world's information. So he took a board seat, stayed until 2007, and Google's IPO in 2004 at $85 a share. Well, that just redefined the tech landscape.
And then just a year later, 2005, came the YouTube investment. I remember how scrappy YouTube seemed back then. Really raw.
Oh, incredibly raw. And Sequoia was reportedly the only major VC firm willing to fund that little video site.
Really? The only one?
Yeah, despite all the looming copyright lawsuits, the very uncertain future, it was a truly contrarian bet.
Wow.
Yet just 1 year later, 2006, Google swoops in, acquires YouTube for $1.65 billion.
Which people laughed at then.
They openly mocked the price, called it absurd. But fast forward to today, YouTube generates over $31.5 billion in ad revenue annually as of 2023 numbers.
Incredible.
That single bet really solidified Moritz's reputation as a visionary, someone who saw potential where literally everyone else saw problems and risk.
And he kept that pattern going, didn't he? Early backing of Stripe in 2011.
Payments.
A company whose valuation later hit, what, $50 billion in March 23, maybe an implied $65 billion by Feb 24, likely due to new funding or strong secondary markets.
Right, that volatility again, but underpinned by real growth.
And famously with Instacart, he applied lessons learned the hard way from Webvan.
Ah, Webvan, the spectacular flame out.
Right, the grocery delivery startup that just imploded after raising nearly $800 million.
That experience was key for the Instacart bet. It raises an important question, though. What truly defined his career strategy across all these different investments?
Good question. What was the common thread?
It clearly wasn't about chasing fads or what was hot at the moment. It was an unwavering focus on fundamentals.
Like
the founder's grit, that resilience we talked about. Precise timing was the market ready, and what he termed the structural inevitability of a product.
Structural inevitability. See more about that.
It means that a product or service was so fundamentally necessary, so aligned with underlying tech and societal shifts, that its success in some form was almost guaranteed, regardless of the initial market noise or competition.
Got it. So he wasn't just investing, he was sort of recognizing destiny.
In a way. You could say he accumulated permission slips through this deep understanding, permission to make these incredibly daring choices. He really transformed himself from just a keen observer, the journalist, into an architect of one of the most powerful venture portfolios ever built.
It's often said Michael Moritz is reserved, quiet, intensely contrarian. And you mentioned his unique radar for opportunity wasn't necessarily born from intuition or just hitting home runs, but from his scars.
Yes.
What was the defining scar that really shaped him?
Absolutely. The big one, the defining scar, was undoubtedly the painful collapse of Webvan.
Yeah.
Back in the early 2000s.
Right. The grocery delivery disaster.
It's a total disaster. Raised nearly $800 million, went public with a valuation over $4.8 billion, and then just collapsed. gone in 2 years.
Oof.
That failure wasn't just a loss on the books. It became a kind of compass for him later, specifically for his decision to back Instacart.
How so? Because critics saw Instacart and immediately thought,
Another web van, exactly. But Moritz, having lived through web van, identified crucial differences.
like what?
Well, the internet infrastructure was more mature by then. Smartphone penetration was way up. Crucially, he saw founders in Instacart who had what he called the gritty willingness to solve the boring operational problems.
Logistics, the delivery.
Yeah, things like managing logistics, inventory, that tricky last-mile delivery. Webvan had notoriously ignored or underestimated those details. But Instacart's founders, they embraced them. They showed that psychological stamina needed to execute on the unglamorous, essential stuff.
So he wasn't just looking for a brilliant idea. He needed founders with that psychological stamina to actually survive the inevitable storms. How did he figure that out? How did he assess it?
Well, he was known for his relentless preparation when evaluating founders. He didn't just look at the slick pitch deck.
No.
No, he dug into details others skipped. He'd probed their reactions to really uncomfortable questions. He was almost looking for that quiet chip on their shoulder, you know?
That inner drive.
That unshakable conviction, that inner drive that meant they wouldn't just fold when things got tough. For Moritz, the human factor, the sheer resilience of the founder, honestly seemed to outweigh the technology itself.
Interesting.
He needed to know if they could endure the stress.
And then there's his famous habit of silence. It wasn't shyness, apparently, but more a deliberate quietness, a strategic low profile.
Exactly. This strategic opacity, you could call it, allowed him to be an observer first, to spot those weak signals before they became blaring trends everyone else saw.
Right.
He lived by a mantra he picked up from Stanford's Graduate School of Business. Look out for the unexpected.
Look out for the unexpected.
And that principle clearly guided him to what seemed like misfit bets at the time. Companies like Google, YouTube, Stripe. They all defied conventional wisdom back then, but they had those underlying structural inevitabilities he looked for.
What's really fascinating here is the paradoxical duality in his habits. On one hand, thriving on these bold contrarian risks. On the other, demanding extreme discipline, extreme preparation. The webvan failure didn't crush his confidence, did it? It became more like a calibration tool.
Perfectly put, a calibration tool. It refined his sense of timing, sharpened his skepticism, made him look even harder at the operational grit.
So what's the takeaway here for us? What does this teach us?
Well, I think it shows that the habits of success are rarely glamorous. Right? They often grow out of failures, out of scars, out of these private routines that are totally invisible to the outside world.
Yeah.
Moritz's non-consensus radar, it isn't magic. It's the byproduct of discipline, of learning from those scars and leveraging that strategic quietness. It teaches us that real success is often about noticing those unlikely signals and then having the courage to actually bet on them when the moment feels right, and being prepared to learn when you're wrong.
So we've talked about his investing skill, his radar, but that leads to maybe an even deeper question. How does someone like Moritz, with that kind of immense wealth, actually view money itself? Because for him, it's clearly not just about piling it up, is it?
No, absolutely not. For Moritz, money is, in his view, simply the beginning of responsibility.
The beginning of responsibility.
And it's fascinating how he's really put that into practice. I mean, one of his most significant acts of philanthropy was that huge gift, £75 million, which was about $116.8 million back then.
Wow.
That he and his wife, Harriet Heyman, gave to the University of Oxford in 2012.
Right, for scholarships.
Exactly. It launched the Moritz Heyman Scholarship Program, specifically designed to support students from disadvantaged backgrounds. Oxford themselves described it as transformational, really changing access to elite education for a lot of people.
And connecting back to his own roots as a writer, he also took on the sponsorship of the Booker Prize in 2019.
Yeah, through his family foundation, Crankstart.
That feels like a really nice full circle moment, doesn't it? Honoring the power of stories.
It really does. But, his influence also has these more complex, sometimes controversial aspects.
How so?
Well, since 2020, Crankstart has directed over $336 million towards social and political initiatives, mostly in San Francisco, tackling big issues like homelessness, education, public health.
Okay, sounds positive.
And while it's definitely been praised for providing, life-saving interventions, it's also drawn criticism. Some argue that billionaire money can reshape civic priorities without public accountability.
The private government argument.
Exactly. raising those tricky questions about who gets to set the agenda when private wealth gets involved at that scale.
That's a fascinating tension. How does someone like Moritz navigate that? The desire to use immense resources for good, while facing scrutiny over the very nature of that influence, and his influence even stepped into the political arena recently, right? July 2024.
Yes, he made headlines when he publicly urged the sitting U.S. president to withdraw from the election race.
Big move.
Huge move, and that decision was definitely a signal amplified across media. It drew both praise for moral courage from some and sharp criticism for elite overreach from others.
So how do you interpret that, connecting it to the bigger picture?
Well, I think it reveals this inherent duality in Moritz's philosophy, giving generously with one hand, but also provoking debate, maybe intentionally, with the other. He clearly believes wealth cannot simply sit idle. He seems to think it must move, it must act. Sometimes that action is uplifting, sometimes it's unsettling, but maybe always aimed at forcing progress as he sees it.
And his decision to step back from active duty at Sequoia in 2023, to focus more on Sequoia heritage and his philanthropy, how does that fit?
I think that also reflects this core belief that structures matter more than individuals, and that lasting impact comes from designing institutions with longevity. He's building systems for the long term, whether it's scholarship programs or wealth preservation platforms for founders. It's about the architecture, not just the person.
And this really raises an important question for all of us listening, doesn't it? Power is never free. Influence, especially when it's tied to that level of wealth, it's always going to provoke debate, criticism.
Always.
So leading with resources at that scale means you inevitably invite suspicion and criticism right alongside the gratitude. It seems like a weight he's willing to carry.
It does seem that way.
Okay, so every empire, every great firm faces its winter. And for Sequoia Capital, that seemed to arrive pretty brutally between 2022 and 2024.
Yeah, tough years.
Frozen venture markets, IPO windows slammed shut. Now, even though Moritz had already stepped back from the day-to-day, these years really became a proving ground for his whole philosophy of the long game, didn't they?
They really did. And one significant wound for Sequoia, which definitely resonated with Moritz's philosophy even from the sidelines, was the write-down of its $150 million investment in FTX.
Right, FTX. Down to zero.
Down to zero in November 2022 after the whole crypto exchange imploded. For Moritz, even though he wasn't directly in command then, it must have reinforced his long-held belief that survival depends not on avoiding mistakes,
but on absorbing them without losing the ability to keep playing.
Exactly. It's about endurance, being able to take the hit, learn from it, and keep moving forward.
And then came that major structural upheaval within Sequoia itself. The decision in June 2023 to split the whole operation into 3 independent entities.
Big news.
Sequoia Capital in the U.S. and Europe, Peak XV Partners in India and Southeast Asia, and Hongshan in China. That separation was completed in March 2024. Now, to some outsiders, it looked like a retreat. But it sounds like internally it was viewed more like necessary surgery, a strategic cut to adapt.
Yeah, adapt to geopolitical pressures, ensure localized freedom for each unit to operate effectively in its own market. What was the deeper strategic thinking there?
I think that decision deeply reflects Moritz's philosophy that sometimes resilience required pruning.
Pruning, like a gardener.
Exactly. Cutting back some branches to ensure the whole tree thrives long term. He connects it back to his long poker game metaphor for VC.
Right, where survival means knowing when to fold weak hands, conserve your chips, even if it means sacrificing a potential short-term gain.
You fold to play another day?
Precisely. And his role as chairman of Klarna during its turbulence also shows this. He navigated its massive valuation collapse at, what was it, $45.6 billion in 2021, down to $6.7 billion in July 2022.
Yeah, huge drop.
And then helped steer its subsequent recovery. He acted as that veteran investor steadying a company, reminding everyone that volatility can be temporary if the underlying fundamentals are sound. It's about not panicking when chaos hits.
And all this time, structures like Sequoia Heritage, which had grown to that $15 billion under management by 2023, they served as a kind of fortress, didn't they?
Absolutely.
Ensuring that even during those rough winters like 2022, 2024, Sequoia's partners, the founders they backed, had the resources and, crucially, the patience for that long game. They weren't forced into short-term decisions by market pressure.
Exactly right. So what can we take away from this about resilience? I mean, it's not glamorous, is it?
No.
It looks like folding a hand when others are shouting all in. It looks like splitting up a global empire to save its core pieces. It looks like patiently enduring tense boardroom meetings.
Yeah.
Moritz, who we often see as this big risk taker, is maybe more accurately a master of endurance. He structures his life, his institutions, to survive the inevitable failures and play that incredibly long game.
Knowing when to pivot, when to cut losses, and sometimes just when to wait.
That's it.
So when the Forbes real-time billionaires list shows Michael Moritz with a $6.9 billion net worth, as it did around August 17, 2025, it's really tempting to just stop there at the number.
Mm-hmm.
But as we've explored today, that fortune is, as you said, just the residue. The real story is in the invisible architecture, the compass that guided him through all the triumphs, but also the failures.
Right.
Unlike maybe some other louder billionaires, his paradox seems clear. Silence outside, radar inside.
And the core lessons that echo from his life, I think they're pretty profound. Money, for Moritz, it's not the finish line. It's a set of options.
Options to wait, to resist.
To step into the unexpected.
Yeah.
And influence is not a trophy to polish, it's a responsibility.
To fund students, sustain literature.
Push cities forward, even if it means absorbing that inevitable criticism about how power is wielded.
Yeah.
And resilience, it's not about being brilliant in one single moment. It's about staying in the game when others fold.
And acknowledging the shadows.
Absolutely. Success, as his story clearly shows, is never free of shadows. For every Google, there's a web van scar. For every Oxford gift, there's criticism of billionaire power. He seems to embrace that full spectrum of impact.
So what makes his story really enduring, it's not just the specific number on a list. It's that he seems to have turned wealth into this living experiment.
Interesting way to put it.
How to bet boldly while thinking incredibly long-term. How to act decisively while remaining quiet. How to use influence while carrying its inherent cost. His steadiness through decades, through failures, through market storms. It feels like proof that maybe patience, discipline, and conviction can still bend history.
Well said.
So, to wrap up this deep dive, we want to invite you, the listener, into the conversation. Take a moment and think of one decision you made that felt risky at the time. Maybe others doubted it, but it ended up shaping your life in ways you didn't expect. Was it your personal Google moment, or maybe your own web van scar? What did you learn from it about how you use your own forms of capital, whether that's time, skills, focus, or choices? And maybe consider what it means for you to carry the responsibility of holding whatever influence or resources you possess, big or small.